a wonderful day. Hopefully you all had a wonderful weekend. And hopefully you all have a wonderful week. I'm glad to be back. It's good. I feel nice and rested. I'm feeling a little bit better health-wise as well, so that's always a blessing. Morning Peter, morning Pop, morning John B. Let's go ahead and jump right into it. And as we kind of always do, right, we want to take a peek out or at the longer range of the market. And for that, go ahead and pull over our monthly chart. And so you can see on the monthly basis, we're still kind of coming down. You see this Fibonacci is, oh, Zoom added these apps all of a sudden. I'll get rid of them. All right, so you can see this Fibonacci is from the year high, the year, and the year low from the previous low. For the most part, we're still inside, so we're maintaining kind of a 2-month balance here so far, right? If we just draw these bodies, it makes it a little bit easier to see if we were to switch our appearance here to the bar. Let's change the color of them real quick. Well, I mean, you can kind of see them. The red kind of throws it off, but you can kind of see like we're getting all these equal highs, and that's at 41.55, right? And so what we call this is an equilibrium with the profile. We're kind of seeing one start to develop down here near that 38.50 to 38.10 level. You can kind of see. And so that if there is a pullback, probably should act as support. If there is going to be continuation higher above that 4,000, I feel like the market probably goes up to that 41.55, and then maybe the reoffer up there if it can't climb over that 20-day moving average. That's a longer perspective. I'm not sure how much range we're going to be getting to start the year. We really haven't gotten any kind of crazy range here. You can see for the weekly, we are one time framing up on the weekly now, so we'll see if that continues. We'll go ahead and pay attention to see if there's going to be any pullbacks, but we're kind of in a 3-week balance for the most part, I would say. We did get that a little bit of extension on Friday, so it kind of feels like everything wants to go up. But for the most part, we're kind of in this 3-week balance after moving down. So you figure you got some buying, they balanced and couldn't find any more buyers up here, right? So what do you do when you've got excess inventory that you need to get rid of? You've got to liquidate. And so what happens here? They start to liquidate. After enough liquidation occurs, you start to get, people that piled in momentum shorts either get trapped or they start to short cover as well. And so we'll kind of see as we get to the top of this, assuming that this has just been liquidation the entire time, there should be immediate liquidation that should bring the market back down to that 38.68. If there's going to be more liquidation, if these sellers are not done. If not, we should get continuation and then, ultimately try to charge up to that 4,000 on a weekly level where we kind of see some previous levels. Jumping over to the daily here, we can go ahead and switch back. So switching over to the daily here, you can see we're just above that 50 moving average, and the 50 just crossed the 100. I would say that's a good sign, right? If our the past 50 days is starting to improve compared to the past 100 days, I would say at least in short term, things are starting to look a little bit better. You can see here, we've made that higher low here. And so now that kind of becomes the center of attention, this swing low here, and then this recent swing high up here, 41.55. So those are kind of our two levels that were kind of trapped in between. There was a lot of trading done. Which time do we have? There's a lot of trading done in this range here from about 4,000 down to about 39.50. So if we do get a boost into that, we've got that 200 moving average right up there as well, and that could be, you know, a magnet trying to pull us up. You can see I've drawn a little channel, I guess you would call this, little up channel. Some people call this a bear flag on the daily, right? So we've just got to pay attention, right? There's a lot going on here, and you've just got to be, you know, what do they always say? Who says that? Remember, for the Civico Capital people, he says, remember today and every day to keep a flexible, unbiased, and open mind. You know, that's great advice because every day, I mean, we come into the market and we're like, okay, we're sitting in this long ass balance. We finally got a breakout on Friday, which seemed like a breakout, which really was just a travel back to the top of balance. It felt like a breakout though because the market trended, and then today, we're just kind of coming in today. A lot. I'm assuming a lot of retail traders coming in today almost blindly, like, oh shit, market's gonna break out of balance and keep rallying. So we've just got to be, you know, patient, right? I'm not saying that it's not going to happen, and I definitely wouldn't mind if it does, but we've just got to be paying attention to sometimes what's supposed to happen doesn't happen, and that can really kind of throw things off. So, Roach, good morning. Jumping into the profile here, you can see we had a triple distribution day, a real trendy day kind of on Friday after a little bit of balance in the middle, and then, you know, a break back up. So we've got a couple of distributions that are untouched, single prints down below, that may act as support if the market is to push down. We are going to be opening up on a gap, and we're going to be opening up above that previous POC. So it's kind of, to me, assuming like, okay, we got to the POC on Friday, we got a little bit of retracement. Halfback was all the way down here, so no real retracement. And honestly, like any break, and this is obviously longer term. I'm not saying like, okay, you want to get in right now, but any break of this that comes down to this 79 and doesn't fill all the way down to here is a viable pullback, basically, I think. But you'd have to be, you know, you'd have to wait for it to get down there. As far as the gap goes, right, we can go with any gap that doesn't fill. Today, the gap is not very big. We're looking like 29 to 30. We're looking at like a 10, not even like a 7 point gap here. So nothing too crazy here as far as the gap goes. Will, good morning. Some options? Yeah, so normally, I mean, I have my eyes on a couple things, and then maybe I'll look at some stuff intraday today. But typically I tend to not put any new options plays on Mondays unless I'm gonna play like maybe earnings or it's late in the day on Monday. Because Monday, like everyone's jazzed up on Monday, you know what I mean? So like premiums gonna be just getting crazy, and so you know you might be right and still get premium crushed on options because of the volatility early on in the week. Um, and so that's why I'm kind of waiting. And then we have Powell tomorrow at 9 o'clock before the market opens, really. So like any options that you get into today probably aren't going to be safe till tomorrow. So if you do get in some options today, best idea, I mean, unless you just assume that they're going to go your right way, would be to fold them before the close, just in case Powell gets on and decides to murder your dreams of becoming rich. Nice little pop up here before the open. What do we got? About 9 minutes still. Yeah, for sure. Yeah, and if you've got some ideas, we'll definitely post them in the Discord, or some stocks you want to look at or anything like that. I'm trying to get a little more advanced with my option strategies. KMG, Happy New Year. Hope all is well.
Hey, Brad, I've been looking at this monthly on like a 9 month range. And if you take a peek at it that way, 39.23 is the halfway mark too. So we're kind of in the halfway mark of the last 9 months
Oh,
right
okay.
now. That's what I was looking at this morning. If we can get stay above it.
Yeah, it's some room to start seeing some shorts cover.
Yeah.
Kevin, happy New Year. Ready to kick 2023's ass. Hell yeah, for real.
So what you get your kids for Christmas? So what's their big gift?
Well, they didn't get like a big gift. They just got like a bunch of shit.
PlayStation 5?
Nah, fuck no.
A bunch of little things and then one big gift. That's kind of what I see.
They got I mean they got all kinds of shit though. Kid, they have too much shit.
Last Christmas, I bought my nephew like some $200 Lego set, all this crap, and him to spend the whole day playing with the 99-cent little twirly thing I got him.
Yeah, like the
You don't know the
box.
kids.
Yeah.
Right. You wind up in Tesla?
Oh, I didn't. No, I didn't play Tesla. The premium on Tesla was so expensive to play this most recently.
Really?
Fuck yeah, it was crazy. Lecker, good morning. Dr. BJ, good morning. So we can expect the breath to open up positive, right? We're open up. Here's the settle from Friday. We're open up about 15 handles above it. So we can expect the breath and everything to open up positive. We'll pay attention to the sectors and then the response of the tick on the open right away to give us a little bit more insight on what the market's directional biases are. All right. Now we're ready and motivated. All right.
I mean, for that really like a good remix on it.
A good remix on it.
Yeah, someone's got to have one.
So as the market gets ready to open here, watch to see if there's a auction down to the 34-ish area. That's the overnight point of control, and see if they can push below that. If they kind of fail, or you see the market start to slow down at that 34, kind of expect a pop, and then if any pop that comes off of this level breaks the open, then we can expect continuation to the upside. If we break past this 34, then there's good odds that we're going to close this gap, especially if the tick starts to fade right away, and just don't get in front of that. Just be done with it. The impulse from Friday was 39.04. Offers trying to come out. All right, there's the bell. So immediately back down here a little bit. Like we said, watch this 34. See if there's a little bit of a bounce off of there. Sectors don't look great off of the open, but the breadth is positive. Tick opens up very positive. We assumed that, right? Now watch the C right here. If it breaks the open, that's what's going to kind of give you the confidence to get that continuation here. No break of the open right there, so you probably flatten. Yeah. Yeah. Not a bad first trade, honestly. 34. I took it from 34.50 to 38.50. You get a second chance at it right here. Buyer's kind of struggling a little bit.
You said Powell's at 9:30?
Powell's at 9 o'clock tomorrow.
Oh, tomorrow.
Tomorrow, yeah. Before he's gonna be on 30 minutes before the market opens. Nice little trade going now. We're back above the open. Starting to get
Good
some
morning,
more green in
everybody.
the sectors. Healthcare just switched green. Nasdaq's not really popping the top like we'd like to see, to be honest. Especially if we're going to get some continuation. And Nasdaq's kind of pulling back pretty fast here.
Morning, Brad.
Morning, Dad. Another rejection right there. I think we probably at least go check on this 50, but look to see if the market can really establish above this Globex high. Healthcare's struggling here. Tech's picked up a little bit since the open, but look, if we go back below the open, that's going to be a bearish look, or the sign of a weaker market, right? A little bit of buying. There we go. A little bit of buyers here. See what they've got. I'm watching the 34 level. That's where we saw the bounce off twice now. So let's see if they do it again. James George, good morning. Good morning. There's a flush back to that 34. Notice how there's no pop this time. Market's just hanging out down here. Nasdaq's catching a little pop here though, so let's see. A lot of stuff's coming down still. Tech's coming down. Looks like buyers got stuck right there at the 38. They're hammering it down here. Morning, Patrick. So now they're looking to close that gap. Let's see what the tick tells us here. Volume's still coming in here. There's 1,600 lots down at the 25. Little shorts cover right there. You're seeing pretty decent little pops from these lows, but it doesn't look like any aggression near the highs. It kind of looks like it just fizzled at the top. The dollar lost support. Yeah, dollar broke down lower. Dollar gapped lower. It's kind of holding its gap. Bonds are in the range. The VIX kind of gapped up. Nasdaq gapped up. The Dow looks like, well, the Dow and the ES both kind of look like shit. You're thinking like maybe the Nasdaq's gonna roll over here. If the Nasdaq rolls over, it should take the market a little bit lower. They did almost close that gap, but we're kind of unlucky. But you figure shorts probably cover right before that previous high here. And really, I think if you're a short seller, your target, even though that this previous day high, closes the gap, their target's still that settle. So if they really can't push back down to this settle, then that kind of shows a little bit of weakness from sellers. But for the most part, we're seeing things start to roll over here. The weighted AD is getting a little bit lower here. You can see the 1 minute just broke below the VWAP. The only thing that's really not agreeing, once again, this year's been an interesting year so far to start the day, or to start the year, is the tick, right? Kind of being held above the zero line. We've got a bid down here of 1,600 at the 25. Nasdaq catching a bid here. We're back to that 34. This was an area that we liked early. You can see it's the overnight VPOC. Excuse me. Fucking damn, I clicked the same button twice on accident. Feature, show volume. So very light volume on Apple pre-market today. AMD also lighter volume. Amazon lighter volume. Google lighter volume. Meta lighter volume. Microsoft lighter volume, a lot lighter on Microsoft. Netflix lighter volume, way lighter. Like there's nobody trading Netflix today pre-market. Same thing with Nvidia. Triple Q's volume was way down. SPY volume also way down. Tesla volume also way down. So with these things kind of starting to turn like this, right? We're kind of sitting here thinking, well, what if we if we're getting this really low volume throughout the entire market, what are the odds of the market continuing down, right? It's a tough question to answer, but typically, unless we see like news or some type of related event, it's really hard to assume that the market's going to be directional without any good volume, right? And so with that, we can kind of just assume that we are going to get some, back and forth here. We're starting to see the ticks start to come down, and it's starting to look, starting to get a little bit, maybe one-sided. Like on the downside, right? It looks like sellers keep trying and trying and trying and trying, right? You see like every sector is getting red. The Dow looks a lot weaker. Actually, the Dow actually looks a lot stronger than the Nasdaq right now. But they're kind of off balance here. So it looks like we're seeing rotation here early. Very tight range, right? We're only in a 15-point range. Nasdaq's starting to pick up. Dow's going. Let's see if Apple starts to turn the corner. Nice. Nice little Paparuski here. Come on, Nasdaq. Let's see what you got. So let's see if we can get any continuation here. And what we'd like to see, you see healthcare picking up, right? Last time we were up here, healthcare was at 30. It's at 40 now. Starting to see some things turn green. Let's see if we can convince here some of these other people to jump on board here. I like it. I like it. All right, I'm covering everything except one lot right here at the 43. And I'll move my stop to 39. A lot of people have the same idea as me. A little bit of profit taking right here at this 43. A lot of people aren't convinced of continuation, as I am, starting to think that the odds are getting better that we're going to increase to the upside. Volume's coming in above the Globex high. That's important. Nice. That's why this thing's being so fucking slow. Look at the volume coming in at the high tick. 871 contracts just traded on the ask. The range is still only 16.5 points, guys. Still a very, very tight range. That's a bit of absorption up there at the high. But I mean, there's decent odds that a high does not hold. At least not till the end of the day. That's for fucking shit. What's going on with this thing? It's not working. Look at energy here. Nice. Oh, so Will, now that we've just got our trade on, we're just kind of letting it roll here. Um, let me take a look around here at some options that I was looking to get short at some point this week, and I'm looking at the energy industry. And let's take a peek at what opportunity we have here based off of market cap. If you want here to manage some risk, you could move your stop up here, probably like 42. Um, just to be, just to give yourself that way you don't come all the way down to 39. I mean, it's only 3 points, up to you guys. But tight range like today, those 3 points might be, you might need those to buy lunch today. So, hmm. I love hearing uh Peter Resnicek like give people the Jim Dalton treatment. And that's like, ask a dumb question, and I'm gonna tell you that was a dumb question. I don't really have that in me. Um, but Liquid, hello again. In old range POC, we already hit the point of control. Um, Here, let's look. I made a new chart this weekend that looks like this. Um, this is just the rolling contract. I'm gonna mark all these so we have them on our chart. But the next level up here is just like 39.91. That's that previous VPOC. If we zoom in here, uh, take a peek at this. This is just all single prints that we're getting into previous excess. So we can assume that there's some selling up here up until that 39.81. This is just like a rolling TPO chart that I have. ES1. No, it should be the same. We should be trading the same contract because ES1 should be the most forward contract, and that's what I'm trading. The H contract is the most forward contract right now. Here we go, a little bit of continuation. or 600 lots on the 50 here. Yeah, send me a pic, Liquid. Yeah, for sure. I'll check it out. So they eat up that liquidity up here at the top, and now you just got a thick book up here. So let's see if these are stops and the market just starts to run through all of these. And that's kind of what it is alluding me to believe what the market's looking to do here. We're seeing a lot of trades on the ask, which to me is, or like should signify aggression. But when we see all these ask trades that don't get anywhere, like if they start to not get anywhere, right? Because we talked about that 34. That's where they first started buying, and then they bought that 45. It looked like when they had all that volume that traded through, and then looked again all that liquidity that traded on the 50. They had to go up there and snag it. So what we shouldn't see is we shouldn't see the market really trade back below really like 40. I don't think. Lots of call counts coming in. Yeah, nice, 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 nice. All right, so let's take a peek at some of these. Okay, so energy's coming, XOM is coming down today, and we should have sold some XOM calls. Still continue. This thing's still saying that it wants to continue up. So XOM's not there yet. Let's look at Chevron. Chevron, we've got some opportunity to sell some calls. Let me look. Hang on. What kind of options plays do you like to do, Will? We can kind of mess around here. Winning one, I'm sure. Back to the 50 here. Buying puts mainly. Well, let's get you out of that mindset, my friend. I mean, lately it's been buying puts. That makes sense because last year has been a complete shit show. What are we looking at? We're looking at DVX. Talking to James yesterday about maybe selling some energy calls. I don't know if you ever do any. I don't know if you ever do any. What's it called? Do you ever try to like collect credit? Do you ever sell some calls instead of buying puts? It's kind of the same thing. Hopefully you weren't buying puts last week on Tesla or late in the week on Tesla. That shit got the ripper of a lifetime. Look how strong tech is here. With a small account, honestly, you should be doing debit spreads, I think. I think that would be opportunistic at least. I'm gonna look at some of these. EVX. This fucking chart loads.
Can you explain that?
What's that?
Debit spreads?
Oh yeah. So we go to trade and let's look at what are we talking about? CVX, we say? CVX. Let me pop this out. Oh, you can. Okay, so if we were to do a debit spread, and you could do here, so vertical is what it's actually called. So vertical, um, if we run the vertical on, I wish the chart would load. It's not loading. We're getting continuation on the ES here. We'll get off. Yeah, I got next trade going here. Well, anyways, I don't know why the chart's not loading up, but so if we're looking at vertical spreads, and let's say we're looking for weeklies, which I'm not a huge fan of, um, you can see basically how they're separated, right? 120 strike and 125 strike. It'd be easier if we go like this, actually. Hang on, I gotta fill this position real quick. Then I'll talk about it.
Well, you sound like you're feeling better.
Yeah, I appreciate it. Okay, so let's take a peek at the stock and figure out like how this spread would work, right? So this is CVX Chevron, and so what we're thinking is we're thinking that eventually there's going to be some weakness in energy. At least that's what I'm thinking, right? Um, that's where there's going to be a rotation. I don't assume that we're going to get this crazy kind of rally that everyone's thinking as far as like to 4,800 or something like that. I'm not convinced yet. I do think that obviously that 4,200 seems very an attractive target for sellers, so it makes sense to go up there, but we'll kind of see what happens. So anyways, Chevron's coming up to supply, right? We can kind of see supply up here. I mean, even all the way, this is all supply. So with that, and we're kind of getting back to that area after popping, even though we're making this higher low, I'm looking at probably selling maybe some calls up here, right? Assuming that Chevron's not going to rally and that energy is going to roll back over. So we'll look 86, maybe even 85 to 90 here, okay? And so the way a debit spread would work, a debit spread, if we're looking for the market to go down, you would basically buy this put and buy a 176 put. And let's go look at the puts here. You can look at the spread. Can you see my screen, Kevin?
Yeah.
Okay, so here's that 170, 172 level. So if you were to take this position, and let's just spread it out because this just makes it a little bit more confusing. We'll go on single. So if we were expecting the market to go down and we wanted to buy a 170 put, we would have to pay 35 cents, $35, right? And then we would sell like a
What time frame?
time frame doesn't matter. This is a weekly.
No,
It,
I mean,
it
wait.
expires at the end of the week. Yeah, end of the week. So we'd pay this 35 cents, but then we'd sell an option at the 65 for 10 cents. So really we're only paying 25 bucks for this 170 option. So if Chevron were to go down to 170, then we would go in the money. The only thing is, if it goes to like 150, every dollar that it makes after 165 goes to the person that we sold the option to. So we make the difference inside here, right? But so what I'm talking about is a vertical credit spread. And so basically, what I want to do is I want to sell these 185s. Why can I not get to the chart on my fucking laptop? Finally, fucking hell. Okay. Probably the weeklies probably aren't worth it, to be honest, for this play. I would say we could do these in February. Yeah, that's not a bad play there.
Did you say you didn't like weeklies?
No, it's not that I don't like weekly ones. It's just that there's just not enough. So like what I'm looking to do here is kind of the opposite of what we just talked about. So instead of doing a debit, I'm looking to do a credit. So basically I want to sell somebody these 185 calls for 405 bucks, and I'm gonna buy these 195 calls as protection, right? So you do 400 minus 146, and that puts us at, let's see. Let me see here. I want to verticals. I'm gonna do, what did I say?
Yeah.
190s and 180, no, 195s and 185s.
So you like a longer expiration or shorter?
I mean, a longer expiration is always better, right? Because you're going to pay for premium. What you're paying for is time, right? That's what you're paying for. So the one, what did I say? Sell the 185s, buy the 195.
95. And so how do you figure out your profit on the trade? The option.
You just have to do the math, really. So I'm just see.
Hey, it's Will. Right when you started talking about options, my boss called me, so I had to take a phone call. But
Oh, no worries.
Oh, you missed a lot of good stuff, man. I'm just playing.
so you're looking at a Chevron options? Is that what this is?
Yeah, I'm looking at Chevron probably rolling over. I think
Yeah.
I think energy has some opportunity to come off of it a little bit. And so if we look at this credit spread here, you'd be selling the 185s for $4, and you'd be buying the 195s or 138. Your break even's gonna be 177.45, and the stock's trading 178.12 right now. And then you're looking. You're looking at like a $260 profit there if this thing expires worthless, which is what you're looking for.
And what's the potential loss? Just the premium?
The max loss would be the difference in between, so it would be $1,000 technically, because you're selling the 185s and you're buying the 195. So technically, your risk is 1,000. Max loss, your max risk is 1,000.
But your profit's only 200?
Your max
You
profit
do your
would
contracts,
be
right?
whatever you sell the contracts for. So yeah, but that's the thing is like your risk, your max risk being 1,000 is not really your max risk, obviously, because you have a stop loss and you have areas where obviously you're not going to let this thing go. You know what I mean? So the max
Right.
loss would be like you get into the position and then all of a sudden the chevron just shoots up to the moon, and then you're fucked. Then you're just fucked $1,000, right? But I mean, there's other options too, and we could look at if we look at like let's look at just the energy sector itself. I think I'm gonna try this. Toss it on, at least for a feeler, and see how them goes. It's only taking off $744 of buying power off of my account, so that must be what it's assuming the max risk is. So it's not even assuming, even though it is $1,000 max risk, it's not even pricing that in. We might be getting
You get out of long before that.
what's that? Oh, yeah, I'll be out way before that. Yeah, for sure. I want to get rid of some of this worthless shit like Delta. Actually, no, I want to keep Delta on. Fuck. The market's not really doing anything, guys. That's why we're kind of just like looking around, because the market's literally just sitting at 53. You could probably move your stop up to 50. If it goes below this B period, you might as well just, wait for a rotation down and find another spot to get in. I move my stop up to 50.50 right now. And there's actually, I'm going to move it down to 49.75 actually. 49.75 sounds good. All right. So let's look at XLE. I'll look at the chart as well.
Is there sim option trading?
Yeah, I'm sure. Well,
Yeah,
there's paper trade on
yeah, you can paper trade on TD Ameritrade. That's what I'm doing.
yeah. You
Oh,
can
really?
yeah, I'm pretty sure most platforms have it. Have a paper trading thing. So I mean, XLE is not really, you're looking at like 94. So you could probably sell. Maybe put a pin on these. Because if we sell the 90s. That fucking, damn it. That Chevron credit I sold was 23 Feb, not 17. Oh well. It's just one. Whatever. So you could sell the 90s and buy the 95.
Do you mind explaining how this strategy kind of works? I'm not,
Is that covering you both ways, or how's that work?
Yeah, so basically, right, like let's see if so here's XLE, right? And so basically if I sell somebody a 90 call, I'm expecting it to go down, right? So I sell someone this 90 call and I protect myself by buying a 95 call. So if it goes up into here, I'm a loser in here, right? If it goes up above here, I'm still a loser, but I'm covered at least from like, you know, serious pain, right? If it closes below 90, and that's all it has to do, close below 90, I'm a winner, right? The thing is the timing on these, that when you want to get short in them, right? So um, if we're looking here and we're looking at the 90, we could sell the 90 here for 335. We could buy the 195, or buy the 95, excuse me. So we sell 335, buy the 95 for 140. We're looking at like $189 of profit for, and you're risking $5 total. Like max risk is 5, but this thing's not even, this thing's pricing in like 311. It's just the timing of it, right? So we want to make sure that we start to see energy start to fade, and the rest of the market start to look a little bit weak before we start to sell that energy. But you can see energy, like energy is kind of weak today as well. So is healthcare, but healthcare still looks a little bit too strong to short. And on a low volume day, it might not be the day where we want to put on these energy trades. But then again, it might be, because Powell might come in tomorrow and just smash the market down. And if he smashes energy, then we're in a couple plays, then that'll be easy risk premium.
So what's the mean when they say the naked? You know,
So naked would be like if I were to sell that 190 call for $335 and not buy the 195. So then technically my risk is uncapped. And my max gain is that 300 whatever.
to water the plants period, we can weigh it out then period.
But depending upon your account size, right? Like you can leg into some of these positions. So let's say you were to like sell a 350 call and then the market got above, right? And so you're like, oh shit, I need to keep hedging this. So you sell a 366, that's pretty much averaging in, right? So your average gets you to here, but then you buy that 3970. That way, as long as the market finishes below this, you know, depending upon where your average is at, but as long as it finishes below this box here, you collect the premium on both these strikes. And so this is called an unbalance. So you're protecting your premium, but only by half. And so a lot of times what people do is like they use that sell here. So like they use this, let's say your account is $500, right? And this play cost to sell 350s, let's say cost let's say these are 500, you're gonna sell these for 500, right? But you know the risk is fairly big or whatever, and your account is a small account, so you don't really want to be putting that much risk on the line. So what you're going to do is you're going to sell some other options or buy some other options, which is going to take away some credit, but also is going to mitigate some of your risk. But it's still your gain is predetermined on a credit spread. Whereas like on a debit spread, you would be basically, like if you were expecting the market to go down, you'd be buying the 56s, right, puts, and selling the 52s. So that way, if the market goes down, you still make money, but you only make this money, right? And this is a way to, if you do have only a $500 account, let's say, and you can't afford the at the money calls, right? Let's say these are $500, your account's $500, you don't want to do that. So what you're going to do is you're going to purchase this one for 500, but you're going to sell this one down here, and this one down here is going to be 300, let's say. And so instead of being 500, it's going to cost you 200. So your max risk on a debit spread is 200, and then your max gain is everything in between the two options. And so debit spreads, I think, are a good tool, especially for learning. It's kind of like a secured credit card, kind of like, you know what your max risk is right off the bat, which you should, on all options plays. But
So that's kind of why I've been buying puts, because I know exactly what my max loss is. It's what I buy it for.
right, but there's better ways than just buying an option and just sitting in it until it goes into profit. I mean, depending upon how you're trading it, right? Like if you're just day trading it, like you get in it, it goes into profit, you close it, then that's different. But if you're looking at a little bit longer dated, like, 'cause I'm looking at a little bit longer dated options, like out into
Yeah,
February.
I've just been getting in and out the same day typically.
Okay.
So
Yeah. So the thing that you can do also is called a ghetto spread, and basically, so let's say you're buying a put, right? And you buy a 39.50 put, and the market goes down and it's at like 39.34, and then all of a sudden it starts to catch a little bit of a bid. Well, you don't want to give up this profit, right? So what you do is you sell, a little bit out of the money call. So maybe you sell the 28.50. So as long as you finish at 28.50, below 50, and above 28.50, the closer you finish 28.50 is max gain. Anything below that, you cap your gains. But what you're doing, by that, let's say right now you buy this 39.50 put for $200, right? It comes down here. So now this 39.50 put that was 200, it's now worth 400, right? And this put down here that was worth, let's say, 50 is now worth 150. Okay, so now you sell this. Remember, your original entry price was 200, so you sell the 150. So now, no matter what, this thing can only expire worthless on expiration for negative $50 loss. So you've mitigated risk by doing that, right? And then what you can do, and this is like what Jim Dalton does basically, right? This is how he legs into a lot of his trades. He does it a little bit more complicated than that, but anyways, so you sold this one for 150, right? So now you're only on the hook for $50. This thing bounces up. This call that you sold goes from 150 back to 50. So you buy it back, right, for $50. And so now you're on the hook for 100. But if this thing goes down past that level, now you've uncapped that low side, so you can collect all the premium going down there. It seems complicated. It's really not that complicated. You're just taking a position on and then taking it off. The same idea. You know what I mean? So it'd be like if you were in a short, it came down here, you bought a call while you were in the short, the market bounced a little bit, you closed your long, the market continued short, you still have a short on from here. It's just a hedge, right? what it does is it does limit your upside. So let's say you're here, right? Got that $200 position. It's up at 400. You sold these, and so your max risk is 50, right? And it just powers through, keeps going down. Well, you're still gonna make dollar for dollar 50 to 28. So, I mean, a little bit different on the futures, but in stocks and stuff, it works dollar for the most part. So you're looking at for every dollar that you're in the money, whatever the delta is. So, but if it powers through, you still make that difference. You're just mitigating risk is what it's all about. Because let's say you're wrong here, right? You got in this position for 200, you did your thing. Now you're only on the hook for 50. All of a sudden, some news comes out, market rips up. Doesn't matter. You already mitigated risk. Your max loss on this position is going to be 50. So you already took 3/4 of your max risk out of the position, and you feel a little bit more comfortable letting it expire that way. Sometimes you can get lucky, especially if you leg into these positions, and that's why it's called the ghetto spread. You sell this, or you buy this for 200, like a $200 put, right? It goes down, and then you're able to sell this one for 200, and now you have zero risk, and you're still collecting dollar for dollar. It's not just because you can mitigate the risk doesn't necessarily mean that you should just sit in the trade till the end of the day. A lot of times when I do this is when we get like extreme volatility. So like if I get in at 39.50, all of a sudden the market just jumps down, we'll sell a put, right, in case we get a little bit of a bounce there. And you're basically at a break even. You can kind of let it decide what it wants to do after the emotion gets out of the way. So there goes the market breaks back down here a little bit. Ticks are getting back below zero. Weighted AD is good. You just get a pull back to the 50 on the 1 minute. And that lets us know that that's kind of like our first sign that buyers are getting tired, I think.
Well, cool. Thanks for explaining that.
Yeah, of course. And there's a lot more ways to do. Like, I mean, there's just like ratio spreads, time spreads, counter. I mean, there's just so many different options. If you're looking for different ways to get into options, like Peter Reznicek, right? He does ratio spreads, are really good. I'm in his room and I follow like most of his trades. I don't necessarily take all the same trades that he does. I just like to get his tone of the market. I think he has a really good sense for the market. And sometimes we're in disagreement on different sides of the market, which is exactly what I need. And then the other people that I really like for options is Tasty Trade. I think that the team over there does a really good job at on their training videos, and you can create a Tasty Trade account for free and watch their beginner videos. But I mean, you can just go on YouTube and they have really good instructional.
Who do you watch on
videos.
TC?
I like Tom Sosnoff, Nikki Bat, Victor Jones. Victor Jones on vacation last week. Chris Vecchio and Ilias Feedback. And then I like Dylan Radigan as well. I mean, I pretty much like everybody out over there, to be honest with you. They don't really have.
The guy that wears the
what?
I don't know about that guy. The guy that wears the beret.
Tom, yeah. He's the owner of the company.
Oh, is he?
Yeah. He's just, I mean, he's old school. And he's kind of cocky. But he's smart. It's like a.
You like him? I like him and Jim do his thing together. Dylan Radigan.
Yeah. And I like them because they're like real people. That's why I like the Tasty Trade team. Is like you can watch them. I tend to listen to them after the market. With this XLE short is already selling down. Missed it. When's earnings on this? What earnings we have this week? Bank earnings, I think. Energy earnings always the last week of the month. Let's get financials. Market's looking good here. Nice bounce off the 50. Watch to see if they just keep holding that. Oh, here we go. Very well. If you're real brave, you could sell some calls in financials. You could probably sell some calls in Wells Fargo. Wells Fargo had like a scandal this weekend of like their senior vice president of the Indian company pissing on somebody during a flight.
Like literally?
Like, yeah, just was drunk as fuck and just pissed on the lady sitting in front of him. Like stood up and just pissed on her. Jason S.
That's bullshit.
Thanks, man. What's that?
That's bullshit when the other executives went to jail when they literally made up like 3 million accounts, charged people, you know.
Yeah, Wells Fargo was a fucking shade.
If I steal somebody's,
How do I miss out on all the fun on the flights? I never get that kind of a flight.
yeah. And then Elizabeth Warren, who just all she does is wag her finger at the CEO. Why didn't you resign? Why didn't you resign? It's like, resign? Where's the grand jury at? I mean, like, what?
They don't care, bro.
They don't. Mm-mm. If you watch on Netflix, there's a series called Dirty Money.
I have seen that, yeah.
Yeah, so there's one on Wells Fargo on that one's really good. Let me get this one on this guy who has payday loans. He's like ripping people off. That was a really good one too. He gets busted at the end.
So here's a pretty decent option, Will. Check this out. I'm looking at WFC 17th Feb. Let's say we
Put your screen.
Yeah, we buy the 45 calls. Oh, we're selling.
Can you put it on your screen?
I'm looking on the laptop. Sorry. If I run the option chain, I mean I can pull up the option chain again. I run on the option chain, like for some reason the computer gets real slow. Because Thinkorswim just like drags it down. So I've just been using my laptop to do all the trades. Nice little break up here.
It's cool for the little option thing in the mornings. Little view.
Yeah. Yeah, especially if we can find some good options plays. So look at this, guys. This is like your key signal here. Like, I mean, like, yeah. I mean, we're seeing this again, right? There's really no ticks below zero. Okay, we spent a couple seconds below the zero line, but we just popped right up below back up to 1,000 as we're making a new high. So we got a little bit, a little bit of a range here as buyers moved up out of off the previous high. They got a little bit tired, rotation, and now you're seeing a break above on increased volume signified by this orange bar. That's kind of a go with situation there. With our next target, really, it's only 4,000. Really. $56. Look at all the trading right here, Roach, at this 58 on if you're looking at your DOM. A lot of selling on the 58 quarter.
Yeah, I see it. I see
Yeah, but they're not going down.
all the volume.
Yeah.
No.
Not yet, at least.
Yeah, we're not going up either. Well,
But we are going up, bro.
yeah. Well, the odds are going. The market's big, so you're putting all that volume and it's not going down. I would say you're going up.
Yeah.
The market's so strong, you might as well go with the upside.
Right. Yeah. No reason to fight it. And remember, that's a key thing from balance rules, right? We know in balance rules that we want to go with any break of balance. That's the first thing we're looking for is that continuation. And when you really, dig down into this, you got this balance. There's the break. Continuation happens in Globex. That's a strong sign, right? And then boom, we get continuation again today. We did close the gap, just mechanically, but other than that, we're just rolling. Rolling. What? You guys remember that song? Limp Bizkit?
Oh,
Oh, yeah.
Throwback.
Yeah, I like Britland. I like what was their song? Break Stuff. That was a good one. Is that the name of it?
I'm not sure,
Limp
but
Bizkit.
I'm not sure of the name of
I
their
think it was.
songs, but they had a lot of good songs.
Yeah. Yeah, I like all this.
That's looking strong still. Only 8 contracts traded on that high tick. That 63 half. Kind of interesting. Good shit. Look at that. See, that's what I'm talking about. 4 trades, 40 points. Good job, Uncle Stacy.
Thanks.
That's how you do it. You just take it nice and slow, let it work.
Well, so here's what we did.
Good job,
So
man.
when we created the trade plan, we said anything above 50 was basically fair game. And I saw that it bounced up and it put in a bunch of volume above 50, but I didn't want to get in just in case it was going to stop me out. And this was the key, is that I wanted my entry, because you and I've had this discussion many times.
Yeah.
I wanted my entry to be reasonable. And so I put my entry at 49, and I was just sitting there waiting to see if it was going to pick me up. And I did it in all 4 of my accounts. And then I had a 3-point stop at 46. And then I had, of course, my initial take profit is 5 points. And so I set them all up. Eventually it hit. And then as I saw it progressing up, and I mean, I lost, I think I was down maybe 3/4 of a point was the most I was, or maybe a full point down. But that was the extent of it. It wasn't anything beyond that. Anyway, and then I wanted it to take the top of B. And so I put my initial stop at 58.50. But then when I saw that it was going to take it and move on, but of course, moving back and forth between 4 accounts is a freaking pain in the ass. So I couldn't just keep going and moving that take profit.
Yeah.
So I just kept moving I moved my stop to 54, and then I put most of them at 61/4, and let it hit it. And then in the one account that I needed the most money in, I focused on that one, and I moved it up a little bit more, and I got all the way to 62/4. So, but that was it. And then and I'm done. That's my day. 10 points in each account was good enough for me.
Yeah, that's a good day.
So I'm going to call it. But anyway, thanks, man. It is through your tutelage of knowing, number one, follow your fucking trade plan. That was number one. And that was what I wanted to do. When I saw it hitting 50 and I looked at the volume and all that volume above 50, and I was like, okay, if it comes back and picks me up at 49, I'm going to run with this. And it did. Worked out.
Patience gets you paid.
That's the plan. So it basically went up about, so I got 62/4. Where did it end up? 63.5. So I basically lost down on 1.5 points to the top so far. I mean, I'm sure it's probably still going to go up because counts are 73.17. I don't know. It seems like it still has more room upside. But anyway, thanks, man.
Yep. Seller's trying to move down here, but buyer's kind of trying to scoop this back up. That 58 was the big volume area, but there's some sellers here on the 60 as well. Nasdaq's pulling off of it a little bit.
By the way, the new model of the bot would have gotten in. It would have just gotten out right now. It would have gotten in at 9:54 Eastern, and it would have just gotten out in this last minute. Oh, I take it back, maybe 4 minutes ago. So I guess right when
into a call.
it would have gotten into a call. Well, so here's what happened. I had not putting this new model in place. I'm gonna test this fucking thing for a while, because on Friday I've been watching it and sort of watching what it would have done. And on Friday it would have lost, I think, $2,200. So I'm like, well, shit, that is, and that's just one contract. So clearly 4 contracts would have been like 10 G's. So I'm like, I'm gonna wait a little bit.
Yeah.
I think I'm gonna spend some time and try and figure out how to get it to the point where we'll actually. I think I have some ideas of how it will get out. So it will still maintain the same trading pattern, but if it gets into the initial trade and it's just not working, it'll close it, and then it will wait, and then let the other trades buy like it would normally. And that way it's basically just getting in and lower. On Friday, it still would have lost. I don't think Friday I could have ever gotten to the point where it would have made money, but hopefully it freaking would have lost a lot less.
Yeah.
$2,200 when a single contract, I mean, the account, my idea was $4,000. And if it's losing $2,200 on a single day, yeah, something's not quite right. So
Yeah, and that can't just
anyway.
be one contract.
Well, no. Okay. So when I say one contract, that's one contract per buy. And on Friday, it would have had how many buys?
Oh, so you were
It would
saying the
have
10
had-
buy would have been like 10 lots per
Yes.
purchase.
When I say 10,
Mm.
when I say one contract, I mean one contract per buy. And on Friday, it would have done 1, 2, 3, 4, 5, 6. It would have done 6 buys. Oh, I take that back. Friday would have been a double down. So it would have actually bought 2 contracts per buy because of the counts in the previous day closing. So anyway, long story short, $2,200. I'm not going to let that be my answer. So I'm going to wait, and I'm going to figure out how to make it so that number's less in my back testing before I put this thing in play. But today, I'm just letting you know it would have gotten out.
Buyer's trying to lift the offer here again. So our key right there was that they couldn't even get back down to that 58, right? Right where all that volume was coming in. This thing came down to 59, 57, or 58 half, and then just popped right back up. So pretty nice response off that trade. And now we're getting close to getting some singles here with the next 14 minutes.
So when you're thinking about doing an option trade, where are you starting at? Like what's the macro, I guess, or
Well, it's all going to depend on your plan, right? So you're going to have to look at whatever chart it is. What I would recommend, and here we can just go through like how I'll look for some stocks here. The market's really just trending up, guys. There's not really much that I can say about it. So I'm just going to cover it up a little bit, but I mean, like pretty much everything's green. We're in along. We'll just keep, holding our eyes closed and pressing the buy button.
Hey, Brad. If there are any tickers you want me to start tracking, and you can look at counts that come in on those, let me know.
Okay.
Because I can add them to the list. And I don't know if you use the page, but you can have that page up just in case you want to use it.
Okay. Yeah. Thanks. I don't have the page up. I need to. That's what I've been trying to do this weekend is try to
Clean
smash
up
everything down. Yeah, because I have a lot of stuff that I have open, but I kind of need everything open as well. That's why I got my laptop out, so I don't have to have. I can have that open on a different screen and just use it for executing orders.
You need another fucking monitor, dude.
I'm gonna get a new computer here pretty soon. So then,
how many monitors you got?
4.
Okay.
But I have one.
Yeah, I have
one monitor is like the size of 4 monitors, and then I have 3 other regular size monitors.
Yeah, I have on my computer that I do the trading on, I have the 3 plus the computer plus the laptop, and then my work computer is the other one where I actually keep the Zoom up. But so, yeah, and I'm running out of space. I don't think it's enough. I think I need another probably 2 monitors.
Peter Reznachek always says, you can never have too many trading screens.
Yeah.
Bad robot.
I mean, I have so much shit going though. I have all of my, because of my code, my pages that I run. So anyway, yeah.
So let's do this. Let's take a 10-minute break. I'm going to take a 10-minute break. And then when I get back, we'll talk about how we're going to look for certain options plays based off of a, possible, based off the scan parameters that we set up. Right. And then we'll build it from there. And I'll show you some things that I look for specifically in some of the other ones to, basically just get that, get me on the right direction, I guess, or make me believe in the options play.
That'd be awesome.
So let's take a quick commercial break. We'll be back in 10 minutes, right before that boring ass D period Euro close happens. Feel free to chat it up.
Hey, do any of you other guys do options trading? Oh, somebody was saying, he was talking to somebody earlier.
I'm doing paper trading right now on options.
Oh, yeah. So how do you?
Is that
how do you
Will?
like it? Yeah, that was Will. Hey, and what are you using What are you using for paper trading?
I use TD Ameritrade.
Okay. So one thing I do want to make sure that you know, because this is something that screwed me up when I started switching from paper to real, is that if you see a fill for anything different than what you put in your limit at, and do you do only limit orders or do you market orders?
I've been doing market orders, but I
Okay.
do limit orders.
So I will say this: if you're opening market orders, it's going to be hard for you to really track it. But I would say this: it's better for you to put in a limit, even if you do so when you do it through, and I don't know how it does it through the actual app, but you do it through the web interface. When you open it up, the price that it puts on there, even though it says limit, the price that it puts on there is the current price. And it will track as it goes. If it goes up or down while you're sitting there waiting to actually hit execute, it will actually go up or down unless you make a change to it physically, and then it will stay at whatever you put it at. But if you do that and you have it set to limit and then you hit order, it's pretty rare that it doesn't, unless it's really drastically moving. It will usually pick it up at whatever that limit is that you put. And here's the reason why I say that that's a good idea is that if you do market, the problem that I've found is that it'll fill your order at a price that is fucking crazy, like insane. Like there were times when I was way early on when I was buying like Snap or Twitter or something, because those are the main two that I used way early on when I was playing with this, is that I would put in an order. Let's say I put in an order at $1.20, and it would fill at like 64 cents. So, and the reason why I say this is it is really crucial that whenever you do a trade in paper, that you base it on your limit price, not the fill.
Yeah.
Because what would happen is that I would get to the end of the day and like, oh, fucking hey, I was up money. I did great, blah, blah, blah. And then I would go back and I would look at it and track it. And where it was filling on my buys and my sells were not realistic. And ultimately, I was nowhere near where it was showing me because the paper was showing me incorrectly. And not to say that it won't fill optimally, not to say that you'll put in a limit, let's say at a buck and it'll fill at 96 cents. I'm not saying that will never happen. But just don't count on that.
Yeah.
Because if you get used to that, and that was what happened is I mean, like from August of 2021 through like March of 2022, I did not have a single day where I actually lost money in paper in my trading. But again, and to be honest, that was when I threw a bunch of money in my account. I'm like, F&A, we're gonna roll this thing. We're gonna go hog wild, and then came back to it, and it was like, oh yeah, that's not real. And I lost. I'll just say I lost money don't make that mistake.
All right. Well, I'll remember that. Thank you.
All right. So we'll let this D period open up, and then we'll build a scan together. So get your ideas ready, and what I want you to be thinking about is what parameters would you be looking at to buy or sell a stock or option or cryptocurrency. You know, what would you say is your number one thing that has to be before you'll make the trade, right? So let's say you want to see it above its 200-day moving average, or you want to see it coming into supply, right? Things like that. So these are things that we'll have to search for. I don't know how we're going to be searching for supply. We just have to scan through charts, which is typically what I do. And it's fairly easy because we can just trade anything that has, when it comes to options, implied volatility. Because if it doesn't have good implied volatility, then I only waste some money to trade it. But there's certain things that always have good implied volatility, right? Like AMD, like my uncle's bot trades AMD exclusively because of the implied volatility inside those chip maker stocks.
And if you guys feel like you want to trade in it, all it does is help my volatility. So you, by all means, go right ahead. Just throwing that out there.
Thanks, man. No idea.
I actually didn't mention it when the bot got in. If you, and that's one thing, I guess, if you guys want me to tell you when the bot does whatever it's going to do and you want to follow along, let me know. Normally I say when it does, but today I was kind of actually talking to a customer, so I didn't get a chance, but I'm just saying I can let you guys know as things go.
Customers always get in a relationship.
I think it'd be cool if you could post it in the Discord under the stocks channel. If you just post like just the entry, like you know, AMD 65 call weekly expire or something like that.
Can I don't know if I have access, but can I create a bot? Because I would like to do that. And then because one of the things I was realizing is that I mean, you guys only have, and I don't know how many of you use my counts or if you even care. I mean, maybe it's for most of you, it's just noise. But if you guys want them, I was realizing that I should do something so you guys can actually see them. And I could create like a channel that just freaking kicks them out.
Yeah, you should be able to. You're a mod in the Discord, so you should be able to do whatever you want.
Okay.
Yeah.
All right. Well, then I may create a channel that just kicks those out. And if you guys want to watch it, because I mean, obviously getting access to the server is not really practical, but I could do something where it just every minute it kicks out what the current counts are. And the fluctuation is obviously, I mean, you guys have seen when they come out, and I do it as often as I can, but at the very least, it should give you an idea of what's really coming through.
Yeah, that'd be cool.
Just so you know, counts are 131 and 0, which again, clearly there's a little bit of a pullback, but I don't know. The count's usually, particularly when it's 0 on the other end, it usually is saying that there's potential continuation. It isn't always right, but
Well,
just throwing that out there.
and the bot got out too. So
True. Well, and the bot will get out even if, like, the bot got out on the top or toward the top of that candle, and then it basically came down a bit. So it dropped like about 50 cents after the bot got out, and then it started to come up again, got back to where the bot got out, and then came down again, and then it came almost back up, and then came back down again. So I'm thinking it's just cycling through that range.
that makes sense.
But I mean, it could be on its way down. I don't know. Just letting you guys know.
Trying to get rid of this time in sales real quick, and I don't know how. Normally there's like little boxes on the side. Oh well. All right, so here's D period opening up. Yeah, and you're just getting, another little bit of a bounce here right off the open. Let's take a peek at a trend here. All right, so basically, when we get this trend, we're on a very steep trend, right? We had our pop up, we broke back, we pulled back, we made a trend, right? And now we're pulling back to that trend again, but we're not quite down to the 50 on the 1 minute. And the 50 typically like signifies like kind of like a reset to 0 basis to me on the 1 minute. That's kind of what I use it as, like who's winning, buyers or sellers? What side of the 50 are we on? But so if there is a break below this 59.60 level, which, it's not looking great, but anything's possible, you can see where all of the accumulation was at from earlier. And so there's good odds that it returns back to value, right? And this is, I mean, we're just looking at this on a 1 minute, the same thing. We can see it right here on the profile, right? We know that the market has moved up and is now has 2 TPOs here. So we had 3 TPOs, we moved up, we had 2 TPOs, now we have 2 TPOs here. So unless we keep continuing up, there's good odds for it to rotate back down. It doesn't necessarily have to rotate like all the way back down to the low, but there's good odds for it to rotate back down. And that's actually the sign of a strong market, is if it builds value, kind of like that, right? Like it pulls back and then it comes up, and then it pulls back and then it comes up, and it doesn't leave like a bunch of weak areas in the profile. All right. Anyways, moving on. Start firing them. What are the number one things that you guys need to have in your search for a stock or a cryptocurrency or a whatever you trade? Any takers?
Below value. If you're looking to buy it, you got to make it below value.
We want to start with the macro first. Look, the monthly.
Well, that's once we figure out what we're going to trade, right? Well, we got to figure out some parameters, some things that we like to see, So we want to see it below value. So we want to see, let's say, stocks. And let's say, let's get rid of this. Let's say we want to see a study, custom. Let's go edit here. Let's say price. Let's say close period daily price type last. Let's say the close was less than the, let's say, where's what number one? High, low, close, one. Less than the high low of the T2 on the daily, and we'll go with the last price. Within, we'll say within 5 bars. Secondary period today is not allowed. So we have to change this to Jesus Christ, this thing is a pain in the ass. Oops. Okay.
Yeah, use something easier. I was just throwing that out there. Just use something easier, whatever you know what I mean?
No, but there should be a way to do it, though. That's the thing. There should be like a percent change, actually, that we can do. So let's do the.
Maybe oversold on like plastic or something.
So let's look for things that are either down 1%. But we don't want to catch everything in the middle. So let's just look for things that are up 1% at least. All right. So let's take a little scan. Yeah, whatever. All right. So the first thing that I like to do here, and you can kind of see like the things that I'm looking at. The first thing I like to do is go to market cap and give it a double click, because that's going to put my, probably most traded options up at the top. Right. And then we can add this to find our implied vol. I don't really care about last, right? And then let's look at some open interest. Okay, so we're up at the top. We see our highest implied vol is going to be here on Amazon, Tesla, and then Google. So what we do, come over here to the chart, and we go to, what do we say, Amazon? Okay, and jump out to the daily or the monthly. We could see one time framing down monthly, double tap of the low, and has bounced off that low, but that low is mechanical. All right, and we're just doing a quick because we're going to be, looking probably to intraday trade most of these options, or maybe for the week or something like that. Going to buy some time, but not really looking for, any home runs. I'm just looking for like 30% profit on the trade. You see Amazon on the weekly is one time framing up. So on the monthly, one time framing down, weekly, one time framing up. So we're getting some counteracting signals. You can see where we have that. I've got a couple of alerts on here as well. And so any pullback, typically you'd probably head back to that 102. It's a pretty decent bounce. Let's look at the daily. Daily's already above the 20. The 50 daily's at 91. And then we've got our gap up here at 105. But we can assume, right? Assume some supply is here and then more supply up here. So, and then some supply below us as well. So now we've decided on a stock that we want to trade, right? Okay, we like Amazon. It's had a nice little bounce. But what are we looking at here? What would we say are the best odds for Amazon within like the next month or so? No takers? I mean,
You're
just
going against the trend. You're
right.
buying it.
shorts have-
Exactly, Roach.
Yeah.
Exactly. If you buy, if we
What
decide we want to get
what do you
long
say?
right here, you're going against the trend, right?
Yeah.
So you can
Yeah, that's what
see
you're gonna find with that scan probably.
right, and especially lately because everything's popping, right? So what we
Yeah.
would do is like, okay, we've looked at Amazon and we'd see this is not a spot we want to get short, because if we want to get short, we want to get short with other supply. So we'd want to get short up a little bit higher, closer to 100 or closer to that 110, or even up there 120 where the long-term trend is at. But right here is not really an advantageous spot to go. Well, there is actually some opportunity here for a long, because you could manage risk in this gap here. And you could probably do it with a put spread.
Yeah, anything you do is gonna be counter trend.
Yeah, and like buying a call on a day like today would be, I mean, all the calls are elevated. Yeah, vertical put spread. That's exactly what I was thinking, John B. Yeah.
Can you
Yeah.
explain that?
So a vertical put spread, we would basically, we got to zoom in just a little bit more to figure out what strikes we want to sell. So I'm a big advocate for the 30-minute. And so we can see some intraday. We know the gap is all the way down to 86, so we could sell some. We could probably sell 84 puts. This 84.38 I liked. We could probably buy some 84 puts and maybe sell some 86s. What are we thinking here? So we've kind of got our play set up, right? The first thing we need to do is kind of think about in a longer term perspective, right? Because we are going to get some time on this option. If we're going to do a weekly option, which is probably the play here, so maybe we won't get too much time. Maybe we'll do the 20th January, so next Friday. We'll get like a week on these. And that'll kind of cut down our cost a little bit. But assuming that the market doesn't get down to 87, we could sell 87s. So then we go over, so we figured out kind of our play, right? So we want to sell an 87 put, and we're going to buy probably this 84 put. And so that's going to give us $4 of risk. So $400 risk, max risk, right? Of course, we'll probably, if this thing comes back down, we'll get out of the way. Looks like it's going to break out right here. And so you got to time these puts to when you want to sell them, because you want to sell them when the market's going down if we're selling puts out, right? So now we go to the trade tab. We'll link it up with Amazon. We're looking at these 20 Januaries, and we're looking at a vertical. Where's custom at? Why can't I just do my own custom? Okay, so we were saying that we wanted to get short the 87s, right? So we want to sell these 87s on a pullback. And so we'll call them for around 170. We could even sell these 87.50s. A little bit greedy there. Where's the... Not really a lot of open interest in these, though. 88s and... So basically we can get short this 87.5 for $1. That's not bad. Dollar credit. And then go back to the chart. But we should be able to get filled for better than $1 because they're on the high. Amazon's on the high. Yeah, we might not get a chance to fill, to be honest with you, because this might keep going up. Would have been a good put sell it earlier today. But anyways, so let's say we get short now. You get short, your account gets credited $1. Your max loss was that 400. Right? So you have $100 in your account. The max you can lose is 400. Netting that would net your account if you took the trade to max loss minus 300 in your account. That would be your max loss. Your max like up and down P&L. But basically what you're doing is you sold somebody these 87s, you bought the 84s, and as long as the market doesn't come below this 87, and expires by next Friday, then you're off the hook. And let's say now the gap now is some of these 87s. That's still $1 wide. So let's say the market rips up, right? These 84s that you bought are going to become, pretty much worthless. These are going to be pretty much worthless, or never get more worthless. So these are going to go from being $1 wide right here to let's say these went from 184 to $1, right? By the end of today, right? Theta kicks in, and now these options are selling for $1 instead of the 184 that you originally sold it for, right? So that's a good time to buy it back because you're buying it back. You sold it for 184, you buy it for $1, you make some money. But when is the right time to buy it back, right? So we zoom out a little bit here and we can see where we're going. Most likely is going to be up here above that 90. We're at 89.28. So what we'd like to do is see how it acts at the 90 level. And if it acts the way that we want it to act, then we just close the position. Does that make sense? But you've got to be doing all of these things like before, right? Like, so, okay, the put spread works here. It looks like it works, but where's our target, right? We don't want to be selling a put spread into resistance, right? But we've got some room up here, 90.91. So if we get over that 90 level, then we're good to hold. If we go to that 90 level and get rejected, then we know we got to close that trade out. So we've got to set up some alerts there um, to make sure we're playing this play correctly. But it's the same idea on everything, and there's always opportunity in the like in the ladder, right? So like there's not always, sometimes there's some mispriced options, and you can get filled, and so this is why, like, for options I typically always try to get filled on the bid, because sometimes somebody will move down and fill you, you know what I mean? Because you can get filled on options from so many different places, and sometimes people need to hedge. And so, like, let's say right now these 8750s are going for 190, right? And these 84s are going for 88. So now you're making a little bit more than $1 here. The spread's getting a little bit wider. Should have went with those 88s, honestly. But sometimes you can find some, mispricing in the options chain and get into a nice position, like right off the bat. That's real little risk. If you wanted to do like let's say your directional bias, right? So let's say we want to be a bullish in this play and we're going to be more aggressive here. And we think that we're definitely going to 190. We could come back over to the chain, go to a buy here, and we would buy these 90s, right? So you'd buy these 90s and you'd sell the 91s, right? And so let's say it goes to 94, you're completely fine. You just add a debit initially. So let's say to get into these 90s, it's going to cost you $233, right? And you're like, I don't want to pay that much. So then you sell these ones below, these 187s for, or these 91s for 188, and then the trade costs you $45 instead of $233, and the only thing you can make is the 100. So you're basically, max profit's going to be $56, whereas your max loss is going to be $44. So you're at like a 1-for-1 trade if you're bullish and you're trying to scalp the top tick of that. That's basically how it is. And so then when the chart, or when the if Amazon goes up to that 90, this 230, or this 90, this 235 will switch to 285, 190 will jump to 235, and then you'll have your $50 difference, and you can just close the position and you'll make the $55, right? The chart has to go in your direction, right? Oh, little options lesson of the day.
Thanks, bro.
Yep, no problem. Could also set profit taking orders at 50% of max profit to de-risk. Yeah, exactly. Yeah. Yeah, and those are things that you should be identifying before. You know what I mean? So like if you have a stock that's getting up to, or like getting some implied volatility hitting and getting some premium, and you're not paying attention, or the underlying stock, like John's talking about, is not really getting bullish. It's just the options that are gaining some premium because maybe market makers are starting to price in a move. then that, that having that take profit on already will really help you be in the right spot, because it could just boom increase in premium, you get filled, and then all of a sudden the stock falls off a cliff, and if you would have still been in, you're holding a losing put. Yeah, still looks strong. VIX is coming down. Bonds look pretty strong today too. More single prints. You're starting to get a little bit of I'm trying to fix this position. The Chevron position is up 6% already. I'm gonna say, fuck, I can't remember. Oh, that's what I was gonna say. The weighted AD is getting a little bit of a divergence here as the unweighted is starting to get a little bit higher, and that's because we're seeing energy, which is like the leader of the smaller sectors, is down pretty decent, which is what we expected. So we're in the right position for that, which is great. And then also healthcare, which is a big sector, is not doing too hot. So you're getting some selling in the healthcare sector still, and now we're getting a little bit of a divergence. Nothing really, I think, to worry about, as the tick still firmly remains pretty much above zero all day. But just something to pay attention to, right? If we start to get too big of a divergence, we start to get a little tickarooski under zero, we start to really establish underneath this, pretty sharp uptrend that we've been sitting in all day. That's when you start looking at that, okay, reversion to mean play, right? And that's what you can do as well. Like, let's say if we wanted to do a search, if we wanted to do a search here or scan, and we wanted to search for things, I wonder if you can do, what would it be, a fundamental? No. Study. Oh, look, here's one called near highs and lows. The current price is within 3% of the 250 period high. No, that's not going to do. Oh, here's what we could do. We could do a VWAP scan is greater than 3 standard deviation movements in the day VWAP. The time frame really doesn't matter. All right, so we've got Wells Fargo. which we were looking at getting short in anyways, which is kind of interesting. Evergrande. I mean, like if it's just like if there's not even a million volume, don't even. I wouldn't even give it the time of day. We already looked at Wells Fargo, so let's look at RCL here. We'll switch back to the monthly. We'll take a peek at RCL, which is Royal Caribbean. So monthly, we can see. I actually used to trade it a little bit. So we do have a higher low on a monthly so far, but it's still not looking great. It looks like it moved right up to the 200 and is kind of rolled over. We've kind of got these moving averages moving down, but nothing really significant. It's still kind of maintaining a longer term trend, it looks like. On the weekly, we're one time framing up, coming into some supply up at like 61.65. On the daily, we're one time framing up pretty sharply. That can give us some opportunity there as well. To short. Now we'll zoom in. And I like this gap over here. That's where that liquidation happened. So we can assume there's some supply up here. So we could probably sell these 60. We'll probably sell these 59s. Buy some 62s. $95 and 31 puts us at about $60 per trade. Assuming that it's going to revert back to the mean, right? And so when I'm looking at this chart, it looks extended, right, to me. And if we zoom into the daily, right, you can see it's holding a nice uptrend. It's made a higher low, but it's got pretty extended here. So it would make sense for it to come into some resistance even up here at this 57. So if we sell those 60s and buy 65s, trade. So if we said sell 60s and buy 65s, we could make a pretty decent, what's that? That'd be 55 cents, so 55 per, so that's even better deal there. And we don't even need, see, the cool thing about doing it this way is we don't really need the stock to move, right? We just need the stock not to move up, right? So if the stock moves sideways, we're a winner. If the stock moves down, we're a winner. So you're kind of like you're 2 out of 3, right? If it moves up, you lose. But these are two out of 3. That's better odds than 50-50, which we know every trade starts off as a 50-50 trade, right? I think we'll look to check these real quick. Market pulling back here after making a little bit of a poor high here. Selling coming in right here. Look at the breakup trend. Back to the 50. So what are the odds now? If we hold below this trend, the odds are good that we return back to the value. You're having these single prints to kind of play off. Pretty decent timing there. A lot of selling trying to come in here. Watch this 66 75 level. If they can't get it back below that, these sellers are getting stuck. They're trying really hard up here. You see the VPOC just shifted up. We're getting value shifting up and the VPOC shifting up. As long as the market holds above that VPOC, sellers get more and more nervous and start to cover on a day like today. And as we get closer to like 2 o'clock, margin calls are going to be, people are going to start making phone calls. But you'd want to see the pop right away, right? Like we were talking about. We want to see this thing not spend a lot of time below trend. The longer amount of time we spend below this trend, the better odds that we return back to value, which is down below that 60. You see that 60.58, we can expect probably some buying there, some short covering old business, and maybe some new buyers stepping up to backfill some of that area, fix some of that weak spots. If not, that's back-to-back days where we've got weak spots, and that's increasing the odds that the market could break lower. Maybe there's some news coming out or some expectations on what Powell's going to say tomorrow. I have no idea. I haven't really looked into it, trying to stay as unbiased as possible. We got pretty biased after the last Fed meeting, but this isn't really a decision. This is just Powell being on TV, so he's going to say whatever he wants to say. Most recently it was Barkin. Someone said something like really dovish, and the market really liked it, and that's why we kind of, I think, have been getting this little short covering rally. But we will, we'll see obviously how it plays out. But yeah, I think I'm gonna call it here. I'm gonna go grab some lunch, grab a workout. You're seeing the market breakdown, right? There it goes. And it's looking for that 60 level. That's where the liquidity is at. Down near that 60. Let's see if it can get it. But yeah, I'm gonna go ahead and go eat some lunch and get a workout in.
Well, great job today, man. Appreciate it.
Thanks, Brad.
Thanks. Thank you, guys.
Yeah, thanks, bud. Take care.
Make sure that you guys are managing risk and sticking. And I will catch you guys later.